Hello and welcome to the 3Bs podcast, where we go beyond the numbers and get into what actually makes a business work. I'm your host, Stephanie Marshall, founder of ABCS UK, a multi-award-winning boutique finance and systems partner. I help business owners who've outgrown the basics bring clarity, structure and proper systems into their business so things finally feel in control. If you want more clarity, more confidence, and a business that doesn't feel like constant chaos, you're in the right place. Each week we tackle real problems, answer the questions you're probably already thinking, and give you practical steps you can actually use in around 15 minutes. So if you're ready to build a better business with confidence and clarity, then let's go. Hello and welcome back to another episode of the 3Bs podcast. Now, I want to start today with a question. Does your business look like it's doing pretty well, but your bank account strongly disagrees? Because this is one of the things I see all the time. You're busy, invoices are going out, clients are paying, and your turnover is growing. Maybe you've even just had your best month ever, and yet you look at the business bank account and think, where the hell has all that money gone? If that sounds familiar, then this episode is for you. If we haven't met before, hi, my name is Stephanie Marshall. I am the founder of ABCS UK, a multi-award-winning boutique finance and systems partner, and I help growing businesses scale past their messy, reactive finances and turn them into proactive, helpful numbers and systems they can actually use to grow their businesses properly. Today, we're going to talk about why your business can be making money on paper while you still feel completely skint. And more importantly, what you can actually do about it. So let's get into it. First things first, turnover is not your money. Now, I know I talk about this all the time, but I'm going to keep talking about it because people still get caught out by it all the time. Turnover or your sales is not profit, and profit is not necessarily cash. Let's say your business turns over £10,000 this month. Lovely, 10 grand. You might look at that and think, okay, business is going well. But then we need to take off your costs, your software, your subcontractors, your staff, insurance, marketing, professional fees, travel, subscriptions, that random bit of software you signed up for 6 months ago and completely forgot existed, then potentially VAT. And then we need to think about tax. If you're a sole trader, that's personal tax. If you're a limited company, that's your corporation tax. And suddenly that £10,000 doesn't look quite so exciting. This is why I really want business owners to stop using turnover as their main measurement of whether their business is successful. It matters, of course it matters, but on its own it tells us very little. You could have a £300,000 turnover business making hardly any profit, and you could have a £150,000 turnover business making a really healthy profit. Which one would you rather own? Personally, I'd rather have the one that actually gives me money, because isn't that the whole point of business anyway? Profit and cash are not the same thing either. And this is where things get slightly more confusing, so bear with me. Because you can be profitable and still have no cash. Let me give you an example. You raise an invoice today and send it out to your customer for £5,000. From an accounting point of view, depending on your accounting method, that income may be sitting in your numbers. But your client has a 30-day payment term. Then they forget, then you chase them, then they tell you it's with accounts, then the accounts tell you it's in the next payment run, and suddenly it's 6 weeks later and you still haven't actually got that £5,000. Your accounts may say you've made money, your bank account says otherwise, and that's the difference between profit and cash flow. Cash flow is what actually pays your bills. You cannot pay your software subscription with an unpaid invoice. You cannot pay HMRC with, but my client owes me £5,000 and it should be in soon. And you cannot pay yourself with a lovely looking profit and loss report when there's nothing in the bank. You need actual cash. So you might be thinking, well, Stephanie, where is my money actually going then? Well, if you constantly feel like money comes into your business and immediately disappears, there's a few places that I'd look first. Number one, your overheads have quietly grown. This one's really sneaky because most businesses don't suddenly add £3,000 of unnecessarily monthly costs overnight. It happens gradually. A £20 software increase here, £49 increase to upgrade a subscription there, £99 for another piece of software, a new subscription, an upgraded package. Something you bought because you were definitely going to use it every single week, that content scheduler, that piece of software that will create you beautiful presentations. Spoiler alert, you didn't even use it once. Now, individually, none of those expenses feel particularly significant, but if you put them all together, suddenly you could be spending hundreds or even thousands of pounds every month on things that aren't actually helping you make money, or you're not even using. So I want you to do something incredibly boring but incredibly useful. Go through your business bank statement, line by line. Look at every recurring payment. If you have a bank account like Monzo or Stan, you can go into your app on your bank and look at recurring payments. And ask yourself, do I still need this? Not, could I potentially use it one day? Because if you want it in 6 months' time, you probably can resubscribe in 6 months' time and save yourself 6 months of payments when you're not actually using it. Ask yourself, do you actually use it? Does it actually save you any time, or does it actually make you any money? And if it answers no to all of those, does it make running your business easier? If the answer is still no, why are you still paying for it? Number 2, you're spending the tax money. Now, this is a big one, and I see this all the time, so no judgment here. Money comes into the bank account and your brain sees money. But not all of that money belongs to you, especially if you're VAT registered. Some of that belongs to HMRC before it even hits your bank. You've also got your tax to think about. And if you don't separate that money mentally or physically, it's incredibly easy to spend it. It's really important to use pots or different savings accounts if you have that functionality in your bank to keep that money set aside. I always recommend to clients that we put away slightly more than what we think they're going to need, because then at the end of every quarter or every financial year, there's a little pot of money there to either take out of the business and spend, or to use towards something to invest in the business, whether that's a new laptop, new software, new uniforms, whatever that may be that the business might want to spend a chunk of money on. That doesn't then affect the everyday cash flow and make you struggle for the months going forwards. If you don't separate that money, the tax bill arrives and suddenly you're scrambling around trying to find thousands of pounds for your VAT or your corporation tax or your income tax. HMRC hasn't unexpectedly stolen your money, and they're not asking for money that isn't theirs. You've spent money that should have been put aside. And I know that sounds harsh, but understanding that distinction is really important. Your tax bill should not be a surprise. You might not know the exact figure 12 months in advance, but with decent bookkeeping and regular management information, you should have a pretty good idea of what's coming. This is one of the reasons I'm so obsessed with keeping your bookkeeping up to date. Bookkeeping isn't just something we do because HMRC says you need records. It tells us what's actually happening in your business. Number 3, clients owe you money. Open your accounting software after this episode and look at your aged receivables or aged debtors report, or your unpaid invoices. How much money are you currently owed? Because I've seen businesses worrying about cash flow while having thousands and thousands of pounds sitting in overdue invoices that haven't been chased. That money needs chasing, and I know some people hate chasing invoices. They worry they'll sound rude, they don't want to upset the client, and they tell themselves, oh, I'm sure they'll pay soon. No. You did the work, you invoiced for that work, the payment date has passed. You are allowed to ask for your money. In fact, you should have a process for it. Invoice goes out, reminder before it's due, reminder when it's due, chaser when it's overdue, another chaser if necessary, and at some point there needs to be an escalation process. You are running a business, not a charity. You are not providing an interest-free loan facility. Number 4. Your pricing doesn't work. Now, this is where things can get uncomfortable because sometimes the problem isn't spending, it's pricing. You can be incredibly busy and still not making enough money. And that's dangerous because being busy can create the illusion that business is doing well. Your diary is full, your inbox is absolute chaos, you're working evenings and weekends, everybody wants you. Brilliant. Except, are you actually making any money from all that work? If your prices don't properly cover the cost of delivering your service, your overheads, your time, and your profit, then more clients can actually make the problem worse. You end up busier, more stressed, with more responsibility, and somehow still no money. This is particularly important for service-based businesses because we're terrible at forgetting to include our own time in the calculation. We think, well, it only cost me £50 in software to deliver this. Okay, but what about that 6 hours of your time? What about the admin time, the emails, the meetings, the client questions? Those extra little jobs you keep doing because it'll only take me 5 minutes. Those 5 minutes add up, which brings me really nicely on to number 5, scope creep. Scope creep. The silent profit killer. Your client pays you for X, but somehow you're now doing X, Y, Z, and half the alphabet. And it usually starts innocently. Can you just And because you're helpful, you'll do it. And then they ask again, and then it becomes normal. 6 months later, you're doing 3 extra hours of work every month, and nobody has ever discussed increasing the fee. This is where reviewing client profitability becomes really important. Not just how much does this client pay me, but how much does it actually cost me to service this client? How much time are they taking? What software are you paying for? Are there subcontractor or staff costs to deliver that service? How much support do they need? How much out of scope work are you doing? Because your highest paying client isn't necessarily your most profitable one. And sometimes the client's paying you £500 a month is costing you significantly more to service than the client paying you $350. And then there's you. We also need to talk about what you're taking out of the business, because sometimes business owners pay themselves completely randomly. Money comes in, they transfer some to themselves, a bill comes out, they put some money back, another client pays, they transfer some more out, then the HMRC needs paying, they panic. Please stop doing this. Your business needs its own financial structure. You need to understand how much the business needs to keep each month, how much needs putting aside, how much your regular overheads are, what upcoming liabilities you have, like your tax or VAT, and how much you can realistically afford to take. That doesn't necessarily mean paying yourself exactly the same amount forever. Businesses fluctuate, but there should be some thought behind it, not just opening a banking app and thinking, oh, there's £8,000 in there, I'll take 3. Because tomorrow £4,000 of bills might leave the account and then there's nothing. The bank balance is not your bookkeeping. This is probably one of the most important things I want you to take away from today's episode. Stop running your business based purely on your bank balance. A healthy looking bank balance can be incredibly misleading. You might have £20,000 sitting there. Amazing. Except 6,000 of that is VAT, 4,000 is earmarked for corporation tax, payroll is due next week, you've got suppliers to pay, and suddenly your lovely £20,000 isn't really £20,000. And this is why good bookkeeping matters. And yes, obviously, I'm a bookkeeper. I'm going to say that bookkeeping matters, but genuinely, this is the difference between recording transactions for compliance and keeping HMRC happy and actually using your financial information to run the business. If you're looking to build a better business, which I presume you are by watching or listening to this episode, you should know what money is coming in, what money is going out, what you're owed, what you owe, what your tax position looks like, whether you're profitable, and ideally what your cash position is likely to look like over the next few weeks and months. You don't need a 47 tab spreadsheet and you don't need to become an accountant. You just need visibility. So what should you do this week? I don't want you to finish this episode thinking, yep, interesting, and then doing absolutely nothing. So with every episode of the 3Bs podcast, here is your homework. And yes, I'm giving you homework. First, look at your current bank balance. Then look at what you actually owe. VAT, tax, suppliers, payroll, anything else coming up. Then look at what your clients owe you, especially anything overdue. Next, review your recurring costs. What are you paying for every single month? And finally, look at your pricing. Are you actually making enough money from the work you're doing? Those 5 things alone will give you a much clearer picture of what's happening inside your business. And if you look at all of that and think, I genuinely have no idea, that's useful information too, because it tells you that the problem isn't necessarily that your business isn't making enough money. The problem just might be that you don't have enough visibility over the money it is making. And that's fixable. Before I go, I want to leave you with this. A growing turnover does not automatically create a healthier business. More clients don't automatically create more money. Being busy doesn't automatically mean you're profitable. And having money in the bank today does not mean you can afford to spend it. The goal isn't just to build a business that makes money. It's to build a business that keeps enough of it. Because your business deserves better than you working your backside off every month and then wondering where all the money went. And quite frankly, so do you. That's it from me this week. If this episode has made you immediately want to open your bank app and start investigating where your money has gone, send it to another business owner who probably needs to do the exact same thing. And if you've realized that your bookkeeping isn't actually giving you the information you need to run your business, rather than simply keeping HMRC happy, come and have a chat with us at ABCS UK. The link is in the show notes to book a call with us when our books reopen in September. Because bookkeeping should tell you a story about your business, preferably one with a bit more money left at the end of it. I'll be back next week with another episode of the 3Bs podcast where we're talking about the numbers you're ignoring that could be costing your business money. And I'll see you next week for the next episode. Bye. And that brings us to the end of another episode of the 3Bs podcast. If this has helped you think differently about your business, then it's done its job. Make sure you're following or subscribed so you don't miss the next episode. And if you found it useful, please do leave a review. It helps more business owners find this and start running their businesses properly. If you want more insights behind the scenes and the reality of what it actually takes to build a better business, come and connect with me on social media. And if you're ready to stop guessing and start running your business with clarity, structure, and confidence, your next step is just a click away, because your business deserves better. I'll see you in the next episode.